Four stocks on buying, June 2024 edition. Welcome in, folks. This is my favorite video I do on this channel each and every month. We're about to get into the stocks that I'm buying, why I'm buying them, how much upside do I see in these stocks, what's the risk in them, all those sorts of things in this video here today, folks. I appreciate y'all joining me. As always, all I ask in return for doing this video here today is you to take 3 seconds out of your day, go down there, hit the like on this video, hit that thumbs up button, and make sure you subscribe to the channel. That's all, folks. That's all. It's time to get our country time on. I already got it. So first one of these four stocks up here is Shopify. Yes, indeed. Oh, I love some Shopify stock. This is a growth stock. It's done tremendous over the past 5 years, but obviously it had the crazy explosive growth during Rona, and then it had to come down from that, right? Which was quite a vicious thing, but that is all in the past now at this point in time. Now, when you look at Shopify, its stock price might be completely crazy, right? But the business model is actually incredibly stable growth over time. And you can pull up a chart like this, and it just shows you how great Shopify's growth has been year after year after year after year. If you look at Shopify's stock price, you would think Shopify is like up and down and up and down all around. But then when you look at the actual business fundamentals, right, you got to differentiate between a stock price and what's happening with the stock price and what's actually happening with the business fundamentals, because we know stock price can be driven by a million different things, right? What's the Fed doing? What's the Fed likely to do in the future, right? What are you willing to pay for stocks? What about a certain growth rate one quarter versus another? What are somebody willing to pay? Somebody might be willing to pay, 1,000 forward P for Shopify at a particular time. Some other time they might be willing to pay a 30, right? It's completely different, but the business fundamentals are what matter. This company last year did well over $7 billion of revenue, billion dollars of revenue, with about 26% growth overall. So phenomenal growth company Shopify is, right? On top of that, 2-year stack, looking at 1000xstocks.com, 2-year stack, expected revenue growth is expected to be over 50%, right? Now, if we go ahead and look at the forward P in the stock, forward P is trading about 59 on the stock. 2-year forward P, which is a new metric we just added to 1000x, which I think can be very helpful to folks out there, that's trading at about a 37 right now for this company, which is significantly, obviously, above where the market is. But let's be honest, the market doesn't have this sort of growth rates, right? There's a whole different growth category for this company. And to show you this, check this out. Get ready to get your flapjacks flipped. Look at this, okay? Current year expected EPS growth, 112%. Incredible, right? What about next year's earnings per share growth? They should have about 40, this is analyst expectations on average, expecting about 46% earnings per share growth for next year. And then on a 2-year stack, earnings per share growth expected to be around 200+% for Shopify overall. So this is one of those companies that whatever they do on their top line growth, so let's say they grow revenue 22%, they should grow the bottom line at a much more substantial clip for this company overall. So they're going to eat up that forward PE. They're going to eat that up over this next couple of years. Now, additionally, Shopify has an A-plus balance sheet, one of the most incredible balance sheets you'll find out there, $1.6 billion plus in cash and cash equivalents. They also have marketable securities at $3.5 billion. On this company, you look at total liabilities. Total liabilities? Come on, man. I mean, it's like nothing compared to what their cash and the marketable securities are alone. I'm not even talking about all the other assets in the company. I'm just talking about literally the cash and the marketable securities way outweigh the liabilities. If you look at total stockholder equity, it's right around $9 billion for this company overall. Absolutely phenomenal balance sheet at Shopify. So it's not just a growth engine, top line, bottom line, it's also a great balance sheet company, right? This is their latest quarter. They had gross merchandising volume was up 23% year over year. This might be the most important number of all the numbers, okay? This is their revenue, but if you exclude the logistics business they sold last year. So they sold off this logistics business, right? So it makes all their revenue numbers look lower if you don't take that into account, right? But if you exclude the logistics business, 29% growth is really their reality in the last quarter, right? And I mean, how many companies are really putting up these sorts of growth rates in this economy? I mean, we're seeing companies like UPS, FedEx, Starbucks, so many other companies with their revenues literally going negative right now. Their revenues are going down, right? And their Shopify is, you wouldn't even know it's a tougher business environment out there because they grow. Imagine if it was a great business environment out there. Imagine what their revenue growth would be in that environment. Incredible, right? Monthly recurring revenue, MRR, which is a very important metric for Shopify, that's up 32% year over year. They're at $150 million plus now at this point in time of monthly recurring revenue. Absolutely incredible for this company. Also has about over a 3% attach rate for this company as well. Now, gross profit grew 33% year over year. So they did almost $1 billion in gross profit. An incredible number, right? If you look at total company gross margin, over 51%, that's up from 47.5% in the same quarter last year. If you look at subscription solutions, 81.4% a gross margin there versus 78% in the same quarter last year. And if you look at merchant solutions gross margin, over 40% versus 37.2% in the same quarter last year. So let's get this right, okay? Let's get this right for a moment. By the way, operating expenses actually down for the company on a year-over-year basis, which is very incredible, right? So let's get this right. The revenue is going up substantially, right? Their amount of customers going up substantially. The earnings per share going up substantially. The gross profit going up substantially. And their margins going up substantially. I like that. And honestly, you could look at Shopify almost every single year, and that's been a lot of what they've been doing, right? Look at the free cash flow. Oh my gosh. Now keep in mind, a lot of people like to value a stock like Shopify more off free cash flow than they do actually off of net income. So just a little food for thought in regards to that. Okay, free cash flow, $232 million in this latest quarter. That's up from $86 million in the same quarter last year. Free cash flow margin of 12%. That's versus 6%. So they doubled that up on a year-over-year basis. Incredible, right? And once again, this is a metric that a lot of people like to. I always like to look at net income, think about where net income's going over the coming years. But I can't dispute there's a lot of investors in the market that like to look at free cash flow. That's their own decision, right? I do things my way. They do their things their way, right? Now, here's a 4-year chart of Shopify. The stock's down 42% in the past 4 years, right? And this is nothing but a blessing for people like myself that are active buyers of Shopify stock right now, because we're getting the stock at heavy discounts versus what people were certainly paying years ago when the company was doing. Let's be honest, the company was not in as good of a spot back then, right? The growth rates might have been higher, but the bottom line is their revenues were substantially lower back then. Their net income was substantially lower back then, right? The whole business model, I think, was a lot more in question back then about how big they could become, and I think a lot more is proven out now. So I look at Shopify now, and I see a company with unbelievable upside, but I also see a company with a lot less risk than if I looked at this company 4 years ago, to be quite frank, right? Now, additionally, this stock used to be up all the way up to $170. Do I think it's going back to $170? Yes. And it's going to go way higher than $170. Like this will be taken out over the coming years. And then from there, it's going to be a whole lot more fun. I see Shopify as the type of company that could be $1 trillion company long term. When you look at the $1 trillion club, those are special companies that can put up special growth despite inflation, recessions. They can put up incredible numbers no matter what. They got tons of growth levers all over the company. And look at Shopify. It's exactly that. They got growth levers all over this company. They can put up great numbers in any environment, recessions, inflation, shutdowns, no shutdowns. It doesn't matter. Shopify's putting up their numbers, growing, and there's really no signs of them taking their foot off the pedal in regards to the situation. I called Shopify stock a stock that you want to buy and you don't want to stop buying that. It's exactly how I view this company for the next several years. It's not like Shopify is one of those stocks where it's like, oh, if it goes up 5%, I got to stop buying it. No. Maybe some value stock out there that has very limited upside. Maybe that's the situation. Shopify has so much upside over this next decade that I can buy this stock and buy this stock. It doesn't matter. The stock could double over the next 3 years, and it would still be a buy. It doesn't matter, okay? It's that sort of company. It's very similar to this company that I'm a shareholder of, okay? And this other company reminds me a lot of Shopify, different business model, but in terms of the thought process about being able to buy a stock and just continue to buy it for years and years to come in the future and build your position bigger and your ownership stake bigger and bigger in that company, this is that company. Check it out. It's called Amazon, okay? Amazon's a perfect example of a company that if you look back at the past 20 plus years, you could buy Amazon stock every year. Every year, every month, you could be a buyer of Amazon, increasing your ownership stake. I'm still very frustrated with myself that I waited all the way until 2022 to start buying Amazon stock. I should have been buying the stock. I mean, I've been in the market since 08, 09. I should have started buying the stock when I first got started in the market, and 2 years into the market, and 4 years into the market, and 6 years. This should have been a stock I was always buying, right? But I didn't really understand how to value these growth companies. I didn't really understand the long-term opportunities and things like that. It took me a long time to really get to that place in understanding you got to pay up for these sorts of companies. Special companies deserve special prices. You've got to pay up for them. You might hope, oh, maybe I can get it at a 20 forward PE. No, okay, not for special companies. For okay companies, maybe. But for special companies, it's just not happening, okay? Because there's always a lot of other smart investors out there that are willing to pay up for these sorts of opportunities. So all dips should be celebrated in Shopify stock over the coming years, just as all dips should have been bought and celebrated in Amazon stock over the past few years, okay? Now, before we get into number 2, anybody that needs help out there understanding income statements, balance sheets, cash flows, how to value stocks, if you're getting ripped off on a stock, if you're getting a great deal, moats, SWOT analysis, all those sorts of things, and wants access to all my best courses, check out my private group. That will be the pinned comment down there. You can click on that, fill out an application, and we'll see if we can get you in there in the next couple weeks, okay? Access to all my best courses, from stock options mastery to become a master of the stock market to financial statements, and you also get to join our Discord community as well, which has an unprecedented amount of 6-figure and 7-figure plus investors in there, okay? And once you hit your 6-figure Hall of Fame, we're going to send this to your house, the Diamond Award right here. It's a heavy beast. And then once you hit the 7-figure club, we're going to send this bad boy right to your house, okay? Once you join us in there, you also get your Steel membership card. There it is. That's the beauty right there. Woo, okay. Alrighty, guys. Stock number 2 of these 4 is Nike. Just do it. There's a 4-year chart of Nike, and the stock has done a whole lot of nothing. But oh, is this one easy money? Oh, is it easy money? Okay. So let's be very clear about Nike first off, right? We all know Nike, clothing company, but it's really a lifestyle brand. Now, everybody wants to be a lifestyle brand that sells clothing, right? They're all going to pitch it as, oh, we're a lifestyle brand. There's one company that's actually been a lifestyle brand over the past many decades, and that is Nike. They are the goalpost. Everybody wants to be Nike. Everybody. Every single clothing company in the world would trade places with Nike. They would love to be Nike, okay? It's a special company. It's a true lifestyle brand. And Nike's up here. They're the pinnacle. And then you'll see, every decade you get a company or two that tries to climb the mountain, and they never reach the peak. They always fall down. They always fall down. It never fails. It literally never fails. You can go back all the way to the 1980s and you can see it all play out. And you can see how many companies have tried to get to the pinnacle Nike's at, and they climb and they look like they're doing well, and they fall down the mountain. It's never been done before, and I don't see it happening anytime soon. And I'll explain why in just a moment, okay? Under Armour is a perfect example. That was a company that 10, 15 years ago, people were talking about, ooh, that's the next Nike. Under Armour, watch out, baby. Well, they're the next Nike. Were they? No, they failed miserably. It's a $6 stock here today, Under Armour, right? It's literally risking going into penny stock category, right? Lululemon, there's a lot of talk. Oh, Lululemon, right? A lot of hype around Lulu the last couple of years. Ooh, they're going to be the next Nike. They're going to be the next Nike. Yeah, that stock just fell 39% in a very quick amount of time, right? We'll see if they're the next Nike. Little secret, they're likely not the next Nike, okay? Why can't somebody come in and knock these guys off the mountain? Right? It's a fair question. Why can't they? Well, let me explain this to you, okay? So, all these other companies that would love to be the shoe brand that everybody prefers and the clothing company everybody prefers, at the end of the day, no one can eat into their moat. And the reason being is they built a moat around this business that no one's got enough money to compete with them, and they honestly don't care enough to really do it the way Nike's done it. So you have all these other brands, and they can be successful. They can build into billion-dollar brands, maybe even a $10 billion brand, but they can't take it further than that. Because when you're talking about the scale Nike's on, you need to spend ridiculous amounts of money on top-tier athletes around the world. You need to spend ridiculous sums of money on the leagues that run these athletes, right? And then on top of that, you still got to spend a ridiculous amount of money on marketing and ads, right? None of these other companies are willing to do that, and none of them can do that. That's why you don't see the biggest athletes in the world wearing Lululemon and wearing Under Armour and wearing these other brands. Nike is the one that is able to capture all that. They're the ones that actually have the money to do that. And then the ones that are willing to put in that sort of money. Because I see a lot of these other brands, and they don't really invest the way they should invest into athletes and leagues and in advertising and their brands and those sorts of things. They focus too much on the bottom line and not enough on really growing that top line. Nike is, ever since Phil Knight started this company a long time ago, he really understood if we're going to build that top line into a massive thing, we've got to sacrifice the bottom line. Very similar to like an Amazon, Jeff Bezos approach over time, right? Of like sacrifice the bottom line for that top line growth. Nike's always done that. Now they've also built an incredibly profitable company over time, right? But that's because they've reached such huge scale on their top line, right? Now, when it comes to Nike, here's the story, okay? So earnings per share growth was very bad. They've got a bunch of basically layoffs that have gone through here recently and a bunch of cost-saving initiatives that are all going to hit Nike positively in the back half of this year and especially in 2025, right? So if you look at current year expected earnings per share growth, 24% looking at here. Next year, earning per share growth of 20% plus again, back-to-back 20% plus, right? And then on a 2-year stack, earnings per share growth is expected to be over 50% for Nike. Phenomenal, okay? That's what we're talking about here, okay? Now, the beautiful thing with Nike is this is a worldwide famous brand. This is a list of top 20 best global brands, and it's an incredible list, right? And here's the deal, okay? I could go basically anywhere in the United States and ask people, you ever heard of Nike? They would say yes, okay? I could go to Germany, ask folks there, you ever heard of Nike? Yes. I could go to Shanghai, China, you ever heard of Nike? Yes. I could go to Tokyo, Japan, you ever heard of Nike? Yes. That's the incredible thing about Nike, and there's very few brands in the world that are worldwide famously known, that you can go in tons of different countries all over the world and people would know that brand. Nike's one of the very few, literally one of the very few companies that you could actually say that for, right? Incredible. Now, we have the NBA Finals coming up here, right? NBA Finals starts next week. And who are the 2 superstar athletes for each team? And who are they signed to, right? Well, one is Jason Tatum. He is the player for the Celtics. He's their big name player, right? Who's he signed to? Nike. He's a Jordan athlete. What about the guy on the other side, the superstar on the other side? Well, there's actually 2 superstars on the other side, but the main superstar, Luka, who's he signed with? Nike, and the Jordan brand as well, right? And so here we are, the big event, right, coming up, NBA Finals, and it's going to be a Nike show, right? The Olympics coming up in the summer, what is that going to be? A big Nike show, okay? That's the incredible thing about this company. So I've built Nike now into my 9th biggest position in the public count. Only positions bigger than the public count are Meta, Tesla, PayPal, Elf on a Shelf, Amazon, Palantir, Revolve, Cheesecake Factory, and then Nike's the 9th biggest position. It's kind of relatively the newest position. I would love to build this into a lot bigger position. I would love Nike to be a 6-figure plus position over time. 100%. Nike's a sleep well at night stock for me. It's easy money. I love stocks that are easy money and I can sleep well at night. I don't have to worry about it. I don't have to stress over it. It's nothing, man. If a stock market crash happens, I'm not worried. I'll buy the dip all the way, baby. If a recession happens, big deal. Inflation, big deal. It doesn't matter. That's the sort of companies I love to be invested in, and that certainly is Nike at the end of the day, okay? Number 3 of these 4 stocks up here that are buys is SoFi. SoFi Technologies, the bank of the future, maybe the bank of the now, okay? So SoFi Technologies does an absolutely phenomenal job attracting millennials and even Gen Z, and they're going to do an amazing job attracting Gen Alpha to their platform. Now, if you look at the growth over time, this is members. I call them customers. They call them members, okay? Look at this, from 1 million to 2.2 million to 3.8 million, 5.6 million, 8.1 million members, customers, whatever you want to call it, on SoFi's platform. So they just continue to gobble up more and more market share, more and more people using SoFi's platform overall, right? And then once you're in the ecosystem, very important everybody understands this, once you're in the ecosystem for SoFi, then they can sell you other products and services that they have overall, right? Now, look at the quarterly performance. 26% year-over-year quarterly net revenue growth year-over-year. That's an incredible number, right? And look at the adjusted EBITDA, earnings before interest, taxes, depreciation, amortization. 25% EBITDA margin in their latest quarter. At this same time last year, 16%. So the EBITDA margin is obviously pretty explosive growth there, and their revenue growth over time has been absolutely extraordinary. Now, they're trying to slow down their growth a little bit right now because Anthony Notos wants to run the business pretty tight right now, right? Given all the risk out there and the uncertainty of what's going on with interest rates, what's going to be happening with the economy, hard landing, soft landing, medium landing, all those sorts of things, okay? So he's playing it smart, in my opinion. They could grow a lot faster than this if they wanted to. But he's keeping the company very tight right now, which I like, okay? Now, total interest income in this latest quarter, $665 million versus $371 million same quarter last year. Net interest income, which is very important because, interest income is one thing, but what's about your interest expense? So you want to look at net interest income, so that's going to, take the two apart from each other. $402 million of net interest income versus $236 in the same quarter last year. Explosive growth in net interest income. Absolutely explosive growth. Right? Look at the net income. $88 million in net income versus a $34 million net loss in the same quarter last year. So now they've also are at the infant stage of profitability. They've flipped. They've now flipped to become a profitable company, and now it's about scaling that profitability over the coming years, right? Now, when we look at 1000xstocks.com and we look at the 2-year forward P, which I think is a very important metric to look at, and you're not going to really find this on almost any other service out there, right? It's a projected number. Talking about a 22-year forward P here for SoFi, it's pretty darn attractive. That's pretty darn attractive. Now, in regards to SoFi, and the reason it's pretty darn attractive is because of how much growth they have at this company, how many customers they're attracting, their net interest income growth, right? Their net income growth, like you're just not going to find that in other banks out there. Other banks are, to be honest, they're trying to stagnate their businesses over the next year or two, right? SoFi's at a whole different level, and that's why I say to only pay a 22-year out forward PE, I think is pretty darn attractive for this one. No, the market cap of SoFi is about $7 billion. Keep in mind this is the bank of the future, plus you're getting the tech platform on the Galileo side as well for $7 billion. Now, to put that in reference, right, the biggest banks in the world, is $581 billion market cap, $312 billion market cap, $252 billion, $208 billion, right? These are like the big dog banks. This is where SoFi's headed long term, in my opinion. Are they getting there tomorrow or next week or next month? No. But are they headed there over the next 10, 20 years? If Noto runs his company as well he's been doing, and he does that over the coming, next decade or two, they could be on this list of like the $100 billion plus banks. When you look at how many members they're attracting, then getting more and more folks with higher net worths over time, right? And attracting people that maybe don't have a high net worth right now, but then they get a higher net worth and they use SoFi as their bank and where they get all their different loans and all these different finance products. I mean, my gosh. And then the way you build your, the back end of your business off that is incredible, right? SoFi's not even close to in the top 100 biggest market cap banks right now. Look at literally number 100 is down here at 21 billion, and SoFi is like a $7 billion market cap right now, right? So think about where SoFi is going to be 5 years out, 10 years out, 15 years out. It's a pretty extraordinary opportunity. All they got to do is survive downturns, make it out to the other side, and grow bigger and bigger and bigger and bigger and bigger, just as they've been doing. And I got to say, Anthony Noto running this company, he's done a heck of a job. You look at his track record, he's doing very well, very well. And like I said, he could be growing this business even faster right now, but if you want to grow it even faster right now, you're going to take even more risk, right? Do you want to take that level of risk right now? No. We're attracting a ton of customers. Net interest income's going up very nicely. The company's very profitable. We don't want to risk the whole long-term future of this company just to grow at extra percentages, right? Why this company's on the trajectory to become a banking giant over the next 10 years, right? Why risk it all to just grow at a little bit of a faster clip? It doesn't make sense. No. Not in this environment. No way. So I like that man in charge. He's growing a lot on me. I think he's probably my second favorite banker. No, yeah, I would say he is my second favorite banker. The only one I put ahead of him is Jamie Dimon over there at JP Morgan. That's it. Those only two really I like, honestly. They're honestly the two only bankers I really like, okay? Before we get into stock number 4, so if you notice, I've been using 1000xstocks.com a lot. Now, 1000xstocks.com is a service I've been creating for a long time behind the scenes, where you can look at all these different metrics, advanced metrics on stocks, right? And be able to pull it all up without having to sift through a bunch of stuff. Just Boom, type in a ticker symbol and all laid out for you right there, right? Be able to compare 3 different companies versus each other, figure out which one's the best deal of the bunch, right? Listen to conference calls right through the website as well. Type in a ticker symbol, boom, conference call right there. You want to listen to at 1.5x speed, 2x speed, slow it down, whatever, you can do that as well. Transcripts, conference calls, transcripts on there as well, plus we got a lot of other things. So if you want to apply to join 1000x, go to 1000xstocks.com right now, and you can go ahead and do that, apply for access, okay? Already, the fourth of these 4 stocks up here is, it's cake, baby. It's cake. Cheesecake Factory. Oh, do I love this one. I love this one. So, you might know this as a very famous restaurant chain, right? Now, a stock like this is usually a very cyclical type company, right? So basically, cyclical type companies are companies that go through these kind of big boom and bust cycles, and restaurants could kind of be seen as that, okay, you feel good about the economy and where the economy is headed, you buy these sorts of stocks, right? You feel bad about the economy and where the economy is headed, you don't buy these stocks, right? And that's usually how you could view, honestly, most restaurant stocks. Cake, it's a very different story. It is not cyclical, okay? So the reason this company is not cyclical is because they have major growth levers all over the company that other companies just don't have, okay? For instance, North Italia. North Italia is an extremely successful concept they have that you're going to see spread all over the United States of America in all types of nice areas over this next 10 years. And so this is such a growth lever for the company overall. This doesn't really put it into a commoditized space overall. This is as big of an opportunity for the company as honestly Cheesecake Factory's brand has been for it as well. Flower Child could be bigger than anything the company's done in the past. I've seen their locations, I've gone to their locations, I've eaten there, I see the type of volume they do here, and this is a concept where it's very different than a North Italia or Cheesecake, where these are concepts where, you know, somebody comes over and waits on you, takes your order and these sorts of things. Flower Child is a little bit more of like a Chipotle type concept in terms of you walk up there and you tell them what you want, okay? The only thing different is like Chipotle does it all in front of you, these guys will make it all fresh and then they bring it over to you. You know, if it's a to-go order, they'll give you the bag, or if it's a, order you'll eat there, they'll bring it over to your table and you get a little thing for your table, right? Then that might be the more I've understood this Flower Child concept and have experienced it, I think that might actually be bigger than North Italia, and it might be bigger opportunity than Cheesecake Factory, which is hard to even fathom because of how big those opportunities are, right? And so if this company was only the Cheesecake Factory, I wouldn't be buying this stock. This wouldn't be a stock I would be investing heavy amounts of money in. It wouldn't be interesting enough for me. It would just be like, okay, they're going to open a few more new locations a year, big deal, and maybe they can go up on pricing a little bit here and there, right, and do maybe a little bit more volume. Like, that would not be interesting to me. The Cheesecake Factory brand itself is just a cash cow. That's the way I look at this. This is just a huge cash cow, extremely successful concept that is then going to be put into concepts that are going to be just as successful, in my opinion, if not more successful over the coming years. Now, they don't just have those. They have the Henry, they have Culinary Dropout, Doughbird, Blanco, which is phenomenal, good Mexican place in Arizona. All these concepts are in Arizona, by the way, if you want to go experience them. Olive and Ivy. I mean, they have all these different concepts, and I'm like, my opinion is when they bought Fox Restaurant Concepts, like, that's the buy of the century in the restaurant space. I don't think there's going to be... It's the best deal I've seen in the restaurant industry since I've been in the market, honestly. I haven't seen a deal that I can say, that was smarter, that was more intelligent. No, this is to Cheesecake Factory what Facebook buying Instagram for $1 billion meant for that company. Like completely fundamentally changed the story and completely changed the company forever. That's the situation here, right? Cheesecake Factory announced they were going to buy this back in summer of 2019. Well, guess what happened shortly after? Rona, right? Rona happened the beginning of 2020, and then everybody kind of steered clear of the restaurant industry. Disruptions happened. Opening locations became very difficult coming out of Rona. That's all a thing of the past now at this point in time. They acquired this they stole it. Like I said, this is going to end up long-term being viewed in the restaurant space like when Facebook bought Instagram. It's going to be like, how? It's going to be like how when people view Google buying YouTube. It's like, what? Like, that happened? This is going to end up adding billions and billions and billions of dollars of market cap to Cheesecake Factory over the next decade. Absolutely incredible, right? Cheesecake Factory today is less than a $2 billion market cap, right? It's actually a baby in the restaurant industry overall if you compare them to these other giants, but there's no doubt in my mind it's going to climb to the top 10 over this next 10 years. Between the growth in North Italia plus Flower Child, And then we could talk about, does culinary dropout? Is that another opportunity? Is it Doughbird? Is it Blanco? Like, what are we talking about? The next, I know restaurants very well, okay? I've always been a lover of restaurants. I experience them all. I'm talking about, when I say them all, I'm talking the best in the world, from the Michelin star places to the mom and pop little, hole in the wall type places, okay? I know what great food is. I know what great service is, and I know what a great ambiance is. And I'm just telling you, Fox Restaurant Concepts has it. They got it across the board. The service, the ambiance, the food, the whole deal, okay? The whole deal. They're above everybody. That's all I'm going to say about that. They're above everybody, and you'll get to see that over this next 10 years, and it's going to be an absolute game changer for Cheesecake Factory's stock price over the next 10 years. Now, when you look at Cheesecake Factory's latest income statement, this is an A- income statement. It's incredible. Their revenues went up quite substantially year over year, $891 million versus $866 million the year prior, right? Look at net income. Net income went to $33 million in net income versus $28 million in net income, right? Diluted EPS looked great for the company. And this is it despite 3 years of inflation, right? I mean, you would think about like the consumer, how bad people have been hit by inflation, and you would just think, man, they've got to be doing bad, right? No, they're actually doing better than ever. And that's despite, 3 years of inflation, all the stuff. And I value that heavy in this sort of market, because I'm looking at some of these other restaurant chains and I'm seeing their numbers go the wrong way. They're going down, right? And then I see a Cheesecake Factory, which is showing very nice growth, top line and bottom line. And I just have to applaud. So Cheesecake Factory is, this is one of these stocks that, people will look back at 5 years from now, 10 years from now, and they'd be like, dang, man, that was like a simple investment. And like, I missed it, right? That's what people will say with a stock like this, right? People like to get up in a lot of these stocks that are the most complicated companies, that it's like some pie in the sky idea of like, might do this and make money someday, and they like to invest in these sorts of companies, right? And sometimes they just miss the easy pitches. And I just look at Cake in the valuation. I didn't even go over the forward P. The forward P is a joke on this company. It's trading insanely low. And they'll look back over time, they'll be like, dang, I missed a really easy one there. Like, it was a restaurant chain that had multiple, different brands that they were going to grow tons of locations for over time, that were going to be profit engines, that then they were going to be able to grow more and more of those brands, and then more profits that are going to build more brands and more profits. And like, people will look back and be like, dang, how did I miss that one? Like it was not the most complicated. And that's what I think will happen here over time with Cheesecake Factory. And it's going to be a fun story. And the great thing is, I get not just a capital appreciation in this one, I also get that sweet dividend as well, which I absolutely love. That dividend is paid out to me every 3 months. And so every 3 months in my portfolio, boom, all that dividend money is deposited, and then I can go buy more Cheesecake Factory stock with that money, or I buy one of the other opportunities. Maybe it's a Shopify, maybe it's a SoFi, right? Maybe it's a Nike. But that's the kind of beautiful thing with a stock like this overall. So love Cheesecake Factory. Love all the 4 of these stocks we went over here today in this video. I hope you guys really enjoyed this one. I appreciate y'all taking the time out of your day to watch this and enjoy this video with me here today. If you're looking to learn from me on a much deeper level, take your game up to a much higher level, click the pinned comment down there, apply to join my private group. We'll see if we can get you in there in the next couple weeks, and you get access to all my best courses, plus access to our 6 and 7 figure community. Much love, and have a great day.